Before you wait another month, thinking mortgage rates will magically drop, I need to show you something that could cost you thousands. Rates just hit their biggest weekly drop in a year. We're talking 6.35% on a 30-year fixed. But here's what 97% of buyers don't know about what's happening in the next 60 days. Hey, if you're waiting for rates in the fours, you're going to be waiting forever. But if you understand what I'm about to reveal, including why September 2025 might be the last good window for the next 18 months, you could save more money than you think possible. I'm breaking down the real data, the insider predictions, and the one strategy that's working right now. This could change everything. Hey, just over the weekend on September 11th, 2025, we just witnessed something incredible. The 30-year fixed rate mortgage fell 15 basis points to 6.35%, marking the largest weekly drop in the past year. But here's what's really happening behind the scenes and why the next 8 weeks could determine your financial future for the next decade. I'm going to show you 3 game-changing insights. First, why this rate drop is not what it seems on the surface. Second, the hidden opportunity window that closes faster than you think. And third, the exact calculations that prove waiting might be the most expensive mistake you'll ever make, because this type of real-time market analysis is exactly what's going to keep you ahead of the curve in this crazy market. Let's start with the elephant in the room, where rates actually are right now versus where everyone thinks they should be. As of today, September 15th, 2025, Freddie Mac reports the 30-year fixed rate at 6.35%. down from 6.50 just last week. The 15-year, if you can afford that, it's at 5.50%, dropping 10 basis points. Those rates are still way too high. But here's the reality check nobody wants to give you. Dating back to 1971, the 30-year fixed interest rate averaged around 7.8%. That means today's 6.35% is actually below the historical average. In fact, when I purchased my first home, my rate was at 8%. I didn't worry about the rate. I was just excited to be a first-time homeowner. We're all spoiled by that pandemic rates. We got used to the historic low of 2.65 in January of 2021, but experts agree that was a once-in-a-lifetime anomaly. Barring another catastrophe, we won't see mortgage rates in the 2% to 3% range again. Here's where it gets dangerous for buyers. While you're waiting for rates that may never come back, 3 things are happening simultaneously. Number 1, fixed rates have been dropping sharply, and September could be a good month to buy a house, but this window is narrow. Number 2, inventory is still tight in most markets, meaning good homes are getting snapped up by buyers who understand this opportunity. And number 3, forecasts from Realtor.com, Fannie Mae, and the MBA expects rates to hover above 6% through 2025, dipping slightly in 2026. Translation, what you see today might be as good as it gets for the next 15 months. And here's the kicker that should keep you up at night. Even small moves in rates create massive ripple effects in buyer demand. When rates drop even a quarter point, everyone comes off the sidelines at once to make those purchases. That means more competition, bidding wars, and higher prices. You end up losing in monthly payment what you thought you'd gain from lower rates. The question isn't whether rates will go lower. They might. The question is, can you afford to wait and risk paying more for the same house when everyone else figures this out with you? Now here's where it gets exciting and why smart money is moving right now instead of waiting. Let me show you the math that changes everything. Remember, we're at 6.35% today, and here's what each quarter point means in real dollars. Look at this. On a $400,000 loan, every quarter point saves you $64 a month. That's $768 a year, $23,040 over 30 years. But here's the brutal truth nobody talks about. Let me break this down. Wait 6 months, hoping to save $64 a month on a lower rate, but the house price goes up $8,000. To get that same monthly payment, rates would have to drop to 5.85%. And every major forecast says rates are staying above 6% through 2025. Here's how it works. You buy now at 6.35% and then refinance when the rates drop. Meaning, let's say rates hit 5.75% in 18 months. That's a 0.60% difference on a $400,000 loan. That's $154 in monthly savings, nearly $2,000 a year. Even with the $4,000 in refinancing costs, you break even in just over 2 years. Then save money for the remaining 26 years of your loan. Total savings over $46,000. This is why waiting is so dangerous. You're not just risking higher home prices, you're missing the opportunity to get in the game and play both sides. Buy now, refi later, and you win regardless of what rates do. But there's something even more important I need to show you, and it's happening in the next 60 days. Here's what's about to happen and why the next 60 days are absolutely critical for anyone thinking about buying. We're in September, historically one of the best buying months because summer competition is winding down, but inventory hasn't hit winter lows yet. September could be a good month to buy a house, and here's why this September is special. The Fed has meetings scheduled and market expectations are backed in for potential policy changes that could affect long-term rates. Here's the thing. Mortgage rates don't wait for the Fed meetings. They move on anticipation, and fixed rates have already dropped sharply before the Fed meeting. But October through December, that's when 3 things happen simultaneously. Here's your action plan for the next 60 days. Week 1 and 2, get pre-approved now. At today's rates, lock in your buying power. Week 3 and 4, start seriously shopping. Don't wait for perfection. Look for potential. And week 5 and 6, make offers. Be ready to move fast when you find that right property. And week 7 and 8, close before holiday inventory shortage hits. But here's the most important part. And the reason I'm so passionate about this timing, the buyers I work with who understand the 60-day window, they're the ones who look back in 2 years and say, best decision I ever made. The ones who keep waiting, they're the ones still renting in 2027, complaining how expensive everything got. According to the data I track, buyers who purchase in September through October typically see 15 to 20% more inventory options than spring buyers. They pay 3 to 5% less than peak season prices and have 40% less competition per listing. Look, I can't make this decision for you, but I can tell you the biggest regrets I see aren't from people who bought at the wrong rate. They're from people who never bought at all. Your future self is counting on you. Your future self is counting on the decision you make in the next 60 days. Don't let yourself down. Even financial experts like Dave Ramsey say, buy the house. And remember these 3 things. Number 1, historical perspective. At 6.35%, you're borrowing money cheaper than historical average. Number 2, opportunity cost. Every month you wait costs you in home price appreciation and competition. And number 3, rate arbitrage. Buy now, refinance later. You win regardless of a rate direction. Your homework for this week is to get pre-approved, start looking at inventory, and stop treating home buying like a casino where you're trying to hit the jackpot rate. Treat it like a wealth building strategy that it actually is. Hey, if this video helped you clarify where rates really stand and what you should do about it, smash that like button and subscribe for weekly market updates. Drop a comment below. I want to know, what's your biggest fear about buying at today's rates? I'd love to help you work through it. And if you're ready to stop waiting and start winning, check the links in the description for resources on getting pre-approved. Remember, the best time to buy a house was 20 years ago. The second best time is right now at 6.35%. In the next 60 days, before everyone else figures out what you just learned. Thanks for watching, and I'll see you on the next one.